Yes. So I think the network is bad. Yeah. I was able to piece it up now. So as I was saying, I said a change of accounting date is a situation whereby a company that has been adopting a particular date, maybe a 31st December, now decided to change to a different date. That is called what? Change of accounting. Though, we also be adopted date. So why a company may change accounting date? So what are those reasons that a company may change accounting date? One is to implement a new tax policy. Maybe there is a now. Assuming there is any rule there that says, okay, the company should do all company must go in line with the government tax year. Who can remind us what is the government tax year? Remind us the government tax year. What is the period for the government tax year?
12 months. A period of 12 months.
Government tax year. 12 months. From when to when?
January to December.
Yeah, from 1st of January to 31st December. So that is the government tax year. So they want certain tax year that's okay from so period to, like in the case of, there was a time CBN came up with a policy that all banks should maintain a uniform reporting date. That is, they should report in line with the government tax year. So that's why you see most of the bank now, their accounting year is 31st December. So that is a regulation by CBN. So we also have another reason. So when you have a group of company, parent and subsidiary, by the time they want to prepare their account, they are going to prepare a group financial statement. So, and to mash up all these financial statements together, they need to be at the same reporting date. As a result of that, the subsidiary may decide to change their accounting date to that of the parent company. Then when there is acquisition, so when a company acquire another company, the company that is being acquired may decide to change to the acquiring company for the purpose of what? For the purpose of reporting. Also, when there is merger of company, that may be need for change of accounting date. So when two or more companies join together to come one, the two companies may decide to government directive. Government may also make a regulation that all companies should also change their accounting date. So those are some of the reasons why company may change their accounting date, which are also very important to us. So the reason why company may change accounting date. Then also we need to look at what is as a taxpayer, the tax authority will look at. What are the things that tax authority will consider? So as a taxpayer, you cannot just wake up in a day and say, okay, I want to change my accounting date. The first thing you need to do is that a request must be made in writing to what? To the relevant tax authority. If you are a company, the relevant tax authority is what? FRA, which is now what? NIRS. So a request must write a request to what? To Nigerian Revenue Service. That's what you want to change your accounting date. And the reason for the change, you must be stated in what? In the request, for them to know whether that request will be accepted or not. After that, by the time you are requesting for change of accounting date, the request must not be an attempt to evade tax. It must not be that because you want to what? You want to evade tax. Under the tax law, we have what is called tax evasion and tax avoidance. Tax evasion is a criminal offense that is usually. So whereby what? You may reduce your income, or you may increase what? Your expenses that are not in existence. You may want to claim them as what? As allowable expenses. So the request must not be what? attempt for you to what? To evade the tax liability, to evade tax by what? By the taxpayer. Then the ultimate tax year of the tax must not be included in the what? 3 statutory years. That year that what? That year before the year of change must not be part of what? Part of the year that will be included as part of what? The statutory year for the computation of tax. Also, the year that you change, where you have already prepared an account in that year of assessment, that year will not be what? Will not form part of what? The year of change. Because you cannot have two accounts in a particular year unless when you are ceasing operation. A company cannot prepare two accounts in a particular year unless under certain circumstances like cessation or some other one, other circumstances. So those are the what tax authority will consider. Then for there to be change of accounting dates, so you need to follow the principle of the basis period and what are the rules to be adopted for change of accounting date to be to be implemented. Rule to be adopted for change of accounting date. So when there is change of accounting date, the following rule will be adopted. The first rule to be adopted is that you identify the first year in which the company changes its accounting date. Identify the first year, the year in which the company failed to make up its accounts to the usual accounting date. That is, identify the first year in which they change their accounting date. That first year, that's what the accounting date changes. You identify that year. After identification of that year, next thing you do is what? You identify 2 subsequent years following the year of change. After the year that they change the accounting date, you now identify 2 years that follow the year of change. What are the 2 years following what? Following the year of change. Then after identifying the 2 years, so the next thing is that you now compute accessible profit on preceding year basis. You are going to compute accessible profit on preceding year basis for those 3 identified years. We have 3 years now, which are what? The year of change and 2 subsequent years after the year of change. So you are going to compute accessible profit. The normal way you compute your accessible profit on preceding year basis for the 3 identified years using old accounting date. You are going to compute it, you use the old accounting date. You also compute what? The accessible profit on preceding year basis using what? The new accounting date separately. You compute one for 3 years for the old accounting date separately. You compute the one for 3 years for the new accounting date separately on a separate basis. Then you now add up each of them separately. Add up the one for the old accounting date separately. You also add up the one for the new accounting date separately. Then you now select the basis with the higher accessible profit because the objective of the tax authority is to what? Is to maximize revenue. The tax authority, they want to make more revenue. So they are going to select the basis with the what? With the higher. The basis with the higher accessible profit. The basis will be higher accessible profit will be selected by the relevant tax authority as the basis for the computation of the tax liability. So when you now select the basis, so the summary you select, as I was saying, the basis that give you the higher accessible profit will be selected. So when you now select the basis, you now write out the summary. The basis you select, you write out the summary of that basis. So you write out the summary of the basis that is being selected by you as the what? As the final solution. So that is the step to be followed for when there is a change of accounting date. Basically, the new tax law have changed this process now. But for the purpose of your exam, you are still expected to know what? To know this what? This procedure, which is what is going to be tested for the purpose of your what? Of your exam. As far as what? As far as the ICAN exam is concerned for the main examination diet. So the nonsense, how do we now determine this year that we said we want to determine? This first year, how do we determine this first year of change? So So how do we determine this one? This first year of change, identifying the first tax year. To identify the first tax year in which a company changes its accounting date, two conditions, you need to follow two conditions. One of the conditions is that what? There must not be what? There must not be a year end in that year that you are going to determine as the year of change. There must not be a year end. There must not be a year end in that year that you want to assume as what? As the year of change. That means the company must have not prepared. As I said earlier, you cannot prepare two accounts in a year unless what? When you are ceasing operation. That means you cannot have what? Two accounting year in a year. So in that case, as a result of that, there must not be a year end in that year. That is one. So there must not be a year end in that year. That is one. Then another condition is that the interval between the last accounting date and the new accounting date must be what? Up to 12 months or more than 12 months. Note the two conditions. There must not be a year end in that year of assessment that there is going to be a change. That means the company must have not prepared any account in that year for you to say there is a change. Also, the interval between the old accounting date and the new accounting date in the information given to you must be up to 12 months or more than 12 months. It must be up to 12 months or more than 12 months. That is the interval between the two of them. So let us now look at an illustration to illustrate that situation one. We have year end 36, 2020, year end 36, 2021, period to 30, 31, 12, 2021, year end 31, 12, 2022, year end 31, 12, 2023. Based on that condition, I told you that there must not be a year end in the year of change. The interval between the old accounting date and the new accounting must be up to 12 months or more than 12 months. Let us now look at this. Here we have year end 36, 2021. Then we also have period 30, 31, 12, 2021. In this scenario, we can see that in 2021, the company changed its accounting date. But this year cannot be the first year of change, cannot be determined as the first year of change. Why? Because there is already a year end. The company has already prepared an account in that year. That means the year of change will be what? 2022 year of assessment. And if you look at it, between 36, 2021 and 31, 12, 2021, the difference between this year and this year is just 6 months. And I told you that for there to be a change, the interval must be 12 months or more than, must be at least 12 months or more than 12 months. But here we have only 6 months. So in that case, 2021 cannot be what? Year of change. So the year of change will not be what? The year following that year, which will be what? 2022. So the first tax year will be what? 2022 year of assessment. And the three statutory year will not be what? 2022, 2023, and what? 2024. Those will be what? The three statutory year that will be what? That will be recognized and what? As the year, as the three statutory year. Also, we have what? Scenario 2, situation 2. We have year ended 39, 2000, year ended 39, 2001, 31, 12, 2002, 31, 12, 2003, 31, 12, 2004. Who can tell me now, what do you think will be the first year of change of this under this situation? What is this first year of change?
2003.
Yeah, 20 what?
2002.
2002.
Yeah, it's not 2003, it's 2002. Because if you look at 2001, that is when they prepare accounts last. 2001 was when they prepare accounts last, which is as at when? September, 30 September. In 2002, there was no account at all. By the time they want to prepare account, they now change to what? 31 December. So that means the year of change will be what? 2002. And if you look at the difference between this year, from this date to this date, if you look at the interval between from here, 3009 to 31/12/09, how many months is that? How many months is that interval that? Between 110, yes, you can see that it is more than from 110, 2001 to 31, 32, that's 3 months. 3 plus 12, that is 15 months. We have what? And I told you it is either equal to 12 months or more than 12. The interval must be equal to 12 months. So in this scenario, the year of change is what? 2002. So the 3 year will be 2002, 2003, and 2004. So that is how to determine what? The year of change. Any question? Any question? Any question? So in the absence of, so let us continue. So we are going to use an illustration to illustrate the principle of what? Change of accounting days. So we have a question 7. Standard Trust Bank Limited, a leading financial institution in Nigeria, decided to change its accounting date due to government policy that stipulates that all banks must have uniform accounting date. The following result was taken from the books of the company. So we have the result as year ended 31/3/2004, year ended 31/3/2005, year ended 31/3/2006, period to 31/12/2007. Then year ended 31/12/2008. All our figure, we are giving the figure. The next require compute the accessible price for all the tax year and give appropriate recommendation. Who can tell me now? What do you think based on what we did earlier on how to determine the first tax year? Which year is the year of change now for this company? What is the first tax year? Which year did they change their accounting date?
2027.
Yes, 2027. You can see that in 2026, there was an account for 30/3/2026. When they now got to 2027, they changed to what? 31/12. If you look at the interval between these, is what? Is roughly up to what? That is 9 plus 12. 9 plus 12 is roughly up to
That's 21.
yeah, 21 months.
21 months.
Yeah, 21 months. So this is the interval of 21 months, which is more than 12. So that means the year of change will be what? 2027. So that means the 3 statutory year we will require will be what? 2027, 2028, and what? 2029. So those are the 3 required years. So let me go to our working sheet so that we can. So the 3 statutory year. I hope we can see my Excel sheet. Can we see my Excel sheet?
Yes, sir.
Yeah, okay, thank you. Then we have so as I told you, the requirement is very important. The name of the company, Standard. We have Standard Trust Bank Limited. The requirement is also important. Computation of tax liability for, if we don't know the year but we know this year already, for 2027 to 2029. For 2027 to 2029 year of assessment. So we are going to start with the workings. So because we need to do the workings first before you. So in the exam, you can just leave a line for the workings so that you'll be able to. So we have the workings. So you can leave a line for the solution. So working 1. So determination. We have a first tax year. We have already determined that the first tax year is 2027. The 3 statutory year. 3 statutory year that we need for our computation, 3 statutory years are 2027, 2028, and 2029. So I also need information about what? Old accounting dates. So let me now go back to the question. So under the question, so let me go back to the question. Under the question, from the question, who can tell me what is the old accounting date here? From the question, what is the old accounting date? From this question, what is the old accounting
31st,
date?
31st
Yeah.
March.
31st of March.
Yeah, 31st of March annually. And what is the new accounting date? What is the new accounting
31st
date?
December.
Yeah, 31st December. Old accounting date is 31st, 3 annually. Yes. The new accounting date is equal to 31st, 12 annually. So after knowing all this now, you now compute your accessible profit. You compute it individually. You first of all use old accounting date. Let us first of all use old accounting date. I want to first of all use old accounting date.
We are
So
not
I'm
seeing
going
your
to,
sheet, oh.
okay, yeah, sorry. All right, thank you. So we are going to compute all the accounting date. So to compute that, we have the tax year. We have the basis period. Then we have the accessible profits. So I have tax year, I have 2027. So basis period for a company that is having an accounting date of 31/3 annually. So the basis period for year of assessment of 2027. So who can tell us what is going to be the basis period for 2027 year of assessment if the accounting date is 31st March annually? What will be the basis period in 2027? Oh yeah. Somebody should tell us. Basis period.
1st of April 2025 to
Yeah,
31st
1/4/2025 to
31st of
30,
March
31/3, 20 what?
26.
2026. Good, thank you. That's correct. So preceding year on preceding year basis. This is a 12-month period. So this is information for 12 months. Yeah, I'm coming back to that. 2028, we have what? Will be 1/4/2026 to 31/3/2027. Then 2029 will be 1/4/2027 to 31/3/2028. So these are the three basis period using what? Old accounting dates. So these three basis period now, we now need to compute what? Accessible profit for the three of them. So let me go back to the question so that I need 1/4/2025 to 31/3/2026. So I need 1/4/2025 to 31/3/2026. Look at it. 1/4/2025 to 31/3/2026. I can see those information. 1/4/2020. So I need 1/4. What do we need? I need 1/4/2025 to 31/3/2026. There are information 31/3/2026 and 1/4/2025. I can see that information here. And I can also see part of it here. We can see the two information in this year end. We have year end 31/3/2025. So I'm coming over year end 31/3/2025. We also have year end 31/3/2026. I have those two information. Year end 31/3/2025, 901 million. Year end 31/3/2025, 900. Year end 31/3/2025. This one is 900. Okay. Then this one is 1 million. So this information I have here, if I want to look at this 1/4/2025 to 31/3/2026, look at it, 1/4/2025 to 31. I can only see it here. It's not even, this one is not part of it. I can see it here, 31/3/2026. between these 31/3/2026, 1/4/2025 to 31/3/2026. We are giving the information straight away. The examiner gave us the information direct to be what? To be 1 million. We are giving that information. They have given us that value. I don't need this one again. They gave us that value to be what? 1 million naira straight away. That information was provided by the examiner straight away. I also need 1/4/2026 to 31/3/2027. If I go back to my question, 1/4/2026 to 31/3/2027. I'm not giving that. I have period to 31/12/2027. Period to, we have period to 31/12/2027 to be, how much is that from the question? To be 1.7 million. 1.7 million. And I need 31/3/2027. This period to this month is starting from 1/4. This particular information is starting from 1/4/2026 to 31/12/2027. How many months is? Who can tell us? This one for 2026 to 31 to 20. How many months is that?
15 months.
It's 15 months. We have it as well, 15 months. So this is 15 months. And I needed only how many months? I can see this particular period inside this place. And I needed only 12 months. Are you sure it's 15 months? Is it not more than that? 1/4/2026. Look at it. It should be more than 15 months now. 1/4/2026. From April to December 2026. How many months is that?
It's 21 months, sir.
From April to December 2026. How many months is that?
9 months.
9 months. From January to December 2027. How many months?
12 months.
9 plus 12.
21.
9 plus 12, 21. It's 21 months. Oh. It's not 15 months. Oh. Look at it. It's 21 months. And I needed only 12 months. So I will have for 12 divided by 21 multiplied by the value 1.1,700,000. So that should give me, how much did it give us? Somebody should help us calculate. 12 divided by 21 multiplied by 1.7 million. How much do we have? 12 divided by 21 multiplied by 17.
971.
971. 429.
428. 429.
429. Yeah, so we have it at 971 429. So that is what the information. Then I also have 2029. In 2029, this is 2028. In 2029, I have 31/3/2028. I can see part of it here. Part of this, what I needed here. 1/4/2027 to 31/12/2027 is here. 1/4/2027 to 31/12/2027. How many months is that? 1/4/2027 to 31/12/2027. How many months is that? 1/4/2027 to 31/12/2027. So up to this date of 21 months. How many months is this one? Oh yeah, now 1/4/2027 to 31/12/2027. This month now, how many months?
9 months.
April to 9 months. This is just 9 months. 9 months. So that means I can see 9 months in this for 21 months. So in that case, I will say 9 divided by 21 multiplied by 1.7 million. So that should give me a figure. 9 divided by 21 multiplied by 1.7 million. That should give us a figure. 728. That is 728. 571. Then I also need information. I need the balance which is from 1 because I need to 31/3/2028. 1/1/2028 to 31/3/2028. If I go back to my question, this is just 3 months. If I go back to the question, if you look at the question, from the question, you are giving year ended 31/12/2028 to be 700,000. Year ended 31/12/2028, 700,000. So this 700,000 now is for 12 months. We are giving information for 12 months. So this 12-month period now, I only need 3 months. So that will now give me 3 divided by 12, multiplied by the figure given to us from the question, which is what? Multiplied by 700,000. I'm coming 3 divided by 12, which is 3 divided by 12, multiplied by 700,000. So that will give me 3 divided by 12 times 700,000. 175. Yeah, thank you. 175,000. So if I add, so I would now add these two information together to get the sum total. So the addition of these two information, so will give me the value here, which is what? 903,571. So which is what? 903. So according to the tax law, I'm supposed to add up all this information, these three data together. So total, and get the total. So I will add up these three together and get the total. After doing this, I will also go to market 6. I will also go to new accounting dates. I will also do the same thing forward for new accounting dates. After the new accounting dates, I have the same year, 2027. And the new accounting date, the basis period for the new accounting date will be, the accounting date is what? 31 December. So who can tell us what's going to be the basis period? If the accounting date is 31 December, what will be the basis period in 2027? What will be the basis
1st
period
of
in
January 2026 to 31st
2026 to
to
31/12/2026?
31st December
2026. Yeah,
2026.
thank you. Then 2028 will be 1/1/2027 to 31/12/2027. Then 2029 will be 1/1/2028 to 31/12/2028. So those are the basis period for the new accounting date. This basis period too, I also need this information. Look at this information. I need 1/1/2026 to 31/12/2026. If I go back to this information I have here, look at it. I have 1/1/2026 to 31/12/2026. I have year ended 31/3/2026 here to be 1 million. But in this 1 million, how many months of this period can we see in this 1 million? Who can tell us? How many months can we see in this 1 million? In this year ended 31/3/2026, how many months can we see there?
3 months.
3 months. We can only see, look at it, we can see 1/1/2026 to 31/3/2026 months. We can get 3 months there. And this information, the total of this 1 million is for 12 months. We just say 3 divided by 12 multiplied by 1 million. 3 divided by 12 multiplied by 1 million. How much did that give us? 3 divided by 12 times 1 million. That will give us 250,000. 250,000. Then I'm left with the balance, which is what? From 1/4/2026 to 31/12/2026. How many months is this one? 1/4/2026 to 31/12/2026. How many months?
9 months.
9 months. I'm left with 9 months. This 9 months, if you look at this basis period of 21 months, I can see this 9 months here in this 21 months. Is that not so?
Yes,
We can
sir.
see this one we can see it in this one, in this 21 months. And I need 9 months. You just say 9 divided by 21 times how much is the value? 1.7 million. That will give us 9 divided by 21 times 1.7. How much?
728,571.
728,571. So we should be, so you add up the two together to get, so the addition will give us the total for this.
So we've not done the one for the third month, third year, so 2029.
Wait, no. So this will give us what? 978,571. Then we have what? After that, we have the second year, 2028. For the second year, we have 1/1/2027 to 31/12/2027. If you look at this information again, new 2027. How many months is this? 1/1/2027 to 31/12/2027. How many months is that?
21 months. No,
No, now 1/1/2027 to 31/12/2027.
That's 12
This
months.
12 months now. This is 12 months. And we are giving information for 29 months. One for 2026 to 31/12/20. We have 21 months. And we only need how many months? 12 months. You now say 12 divided by 21 multiplied by the value. How much is the value for the 20? So 1.7 million. Multiplied by 1.7 million. That will give us how much? 971. So that will give us 971,429. So this one will be 971,429. Then we have the third one, 1/1/2028 to 31/12/2028. If we go to the question, so let me go back to it. 31/12, year ended 31/12/2028. We are giving that information straight away. Year ended 31/12/2028. To be what? 700,000. The examiner gave us that value straight away. So since he gave us the value straight away, so no operation, so we don't write out the value as well. 700,000. So you now add up all these three information. So we are going to add up these three to get what? To get the total. I mentioned earlier, which one is the tax authority going to select? Which
The
one are they
one with
going to
higher
select?
accessible profit.
Yeah, the one with higher accessible profit. So from this information now, between the old and the new, which one is giving higher accessible profit?
The old one.
The old accounting date. So the old accounting date is giving us what? The higher accessible profit. So when you now select, so this will now be selected. So this one will be selected. So when you now select, that's not the end of your answer. So you now, this information you now select now, you now go to your solution. All what you did now is working. So you now go to your solution and what? And copy all what the information in the one you select, you now copy it to the solution as your what? As your final answer. So this is now our final solution. So this is our final solution. So all those things we did earlier are what? They are working. So you now do your final answer under what? So this is, you now post it to your, so when you are posting it, you are not to post with it the what? The total. You only need the total to determine, we only need the total to determine what? Which of them to be selected. After you have determined the total to be selected. When you are writing out the what? The summary, the final solution, you are not going to write out the total to be what? Of the what? Of the accessible profit. So after this period, so which is what? 31/3/2028, which is the last period given. So we also have, so 31, so which is what? 31/3/2028, which is what? The accessible profit for the what? For the period given to us, as far as what? As far as what? As the tax liability is concerned. So that is what? That is how to prepare what? Accessible profit using what? When you have what? Change in accounting dates. So when there is change in accounting date, this step will be followed to the what? To determine the accessible profit of what? Of the taxpayer during what? During a period of what? Change in accounting dates. So so you can see So that information we just illustrated is what we have here. So which is what this, you can see the old accounting date and the new accounting date. So each of them, one will be selected. So it is the one that you select that you now write out the summary. Very important, you need to write out the summary. Failure to write out the summary may also lead to a loss of mark. Because that summary you write out is what is the final solution. The summary is the final solution. Take note of that. Do we get that? So that is the final solution. Then we may have a scenario whereby, so those are the three scenarios that we need to know as far as the accessible profit is concerned. At this level, at the skill level, you also need to have a knowledge of how to determine what? Accessible profit when you have the three scenarios together. You may have a question whereby the examiner will not give you each of these three scenarios under abnormal profit separately. The examiner will give you the three scenarios as a single question. It will give you a question that is having what? That is having commencement rule. The question will also have what? Change of accounting date. The question will also have what? We also have cessation. So when you have that, you also need to what? You also need to know how to what? How to apply the three principles on such scenario. So we are going to use this question number 9 to illustrate that principle, because at this level, you also need to have what? Knowledge of what? How to join the three scenarios together. So we have a Opal Limited carrying on business as an importer of fruit juice and commenced operations since 1st February 2000, making up his account each year to 31st July. After some years, he changed his accounting date to end of 30th November of every year. And on 31st March, the company ceased to trade due to ban on importation of the product. The company adjusted profit as agreed with relevant tax authority for purpose we are as follows. We have what? All this information, we are giving the adjusted profit. You can see that this question is telling us about commencement, change in accounting dates, and cessation. Then they now say require compute the accessible profit for the relevant year of assessment. So for this particular question, so let me come here again. So you need to what? To list out all your information. First of all, so let me list out all my, so I have what? Opal, the name of the company, Opal Limited. Opal Limited. The requirement, computation of accessible profits for relevant years. I don't know the years of assessment, but I'm allowed to put relevant years of assessment. So before I can do anything, I need to do my workings. I will now come here and go to workings. Workings. Working number 1, I need to state out some information. Date of commencement. What is the commencement date of this company? Who can tell us what is the commencement date of this company? Let us go back to the question. From the question, we can see that the commencement date is what? We are told that commence operation on 1st February 2016. So commencement date of commencement is what? 1/2/2016. 2016. When they commence business, they have an accounting date. They have old accounting date. They have the old accounting date from the question to be 31st July annually. 31st/7 annually. They also have new accounting dates. New accounting dates to be, from the question, new accounting date to be what? 30 November annually. 30/11 annually. After that, we have a date of cessation. The cease operation on which date? From the question also, the cease operation on 31st March 2024. 31/3/2024. Based on this information now, I also have, after that, I have what? Year, I need to determine year of change. Year that they change the accounting date. So let me now go back to the question so that we can determine it together. Year of change. From this question now, who can tell us which year did the company change its accounting date? From this question, which year did they change their accounting date?
2020.
Oh yeah, now
2020.
2020. The accounting date was, you can see, in 2019, we already have a year end in 2019. Before they now move to period 2. And if you look at the interval between this and this, it's not up to 12 months. So the next year will be the year of change, which is 2020. So year of change, the year of change is what? 2020. The 3 year we need is what? 2020, 2021, and 2022. So year of change will be 2020. So we now need what? The 3 years needed are 2020, 2021, and what? 2022. Before you can compute the accessible for, you need to what? Do your accessible, before you can do your solution, you need to apply the principle of what? Change of accounting date. And how do you apply the principle of change of accounting date? By doing what? Old accounting date. You do old accounting date. Old accounting date. We do old accounting date. Okay, let me put it that way. Old accounting date. So for the old accounting date, we are going to prepare accessible profit for 2020, 2021, and 2022. So what's going to be the basis period if the year of assessment is, if the accounting date is 31/7? So the basis period will be 1/8 what? 2018 to 31/7 2019. Abi, is it correct? For the old accounting date for this 31/7. So this one is 1/19 to 31/7 2020. So this one will be 1/8 2020 to 31/7 2021. Each of these now, you now what? You now look for their accessible. We need to look for the accessible profit. For the first one, I have 31/7/2017. So let me go to the question 31/7/2017. We have it already. We are given straight away by the examiner. 31/7/2017 to be what? 180,000. If you look at the question, we are giving this one to be 180,000. We are giving that value straight away, 180,000. I also have 31/7/2020. From the question 31/7/2019. We are not giving those. I was looking at 2017. 31/7/2019. I need 31/7/2019. 31/7/2019. I need year ended 31/7/2019. 31/7/2019. Look at it, 31/7, year ended 31/7/2019. We are giving now. This is it here. 150,000. We are giving that value to be 150,000. Year ended 31/7/2019. So we have that one to be 150,000. I also need 31/7/2020. If you look at this question, 31/7/2020, we can see part of it here. How many months is this 390,000? Who can tell us? How many months is this 90,000? How many months is this 90,000? Oh yeah, now how many months is this 90,000?
4 months.
4 months.
2
Are you
months.
sure? It will be from August,
2 months.
September, October, November.
From August,
not 2
September.
months, July,
3 months.
August, September, October,
August,
November.
September. Okay,
It's
4
4
months.
months now. 4 months. 4
4
months. We are giving 4 months to be 90,000. So that means, and we needed 12 months. 4 minus 12, we are left with how many months? 8 months, Abi? Abi, 4 minus 12 now.
Yes.
12 minus 4, 8. We are left with 8 months. The balance of 8 months, we are going to see it in what? In this 360,000. So let me now go. So we have 4 months. So we have 4 months to be 90,000. From this information, we have 4 months. 4 months to be equal to 90,000. Divided by 12, multiplied by 8 divided by 12, multiplied by what? 360,000. So the value is what? 360,000. Multiply 8 divided by 12, multiplied by 360,000. How much did that give us?
240,000.
240,000. So we have it as what? 240,000. So when you add up these two together, so that will give us the accessible profit for that, which is what? 330,000. We have 330,000 here. Which is that? Then I also need 1/8/2020 to 31/7/2020. This information I need can be gotten from 360, 30/11/2020. It can be gotten from 30/11 from year ended 30/11/2020, which is 360,000, and also from year ended 30/11/2021 is equal to what? 30/11/2021, 300,000. I can get this information I need from this particular information. I can get it from these two values. What I need is 1/8/2020 to 31/7/2021. Look at it, 1/8/2020. With 1/8/2020 to 31/3/2020, how many months is that? 8 to 11. 1/8/2020 to 30/11/2020. How many months is that?
3.
4
1/8.
months.
It's not
4
3, it's 4 more to 8, 9, 10, 11, 4 more. That will be 4 divided by 12 times how much? 360. Then the balance of the 8 months will be gotten from the 300. That will be 8 divided by 12 times 8 divided by 12 times 360 times 300. So this information will give us the two values. The first one is 4 divided by 12 times 360. So that would be 1 what?
120.
120. Yes, 120,000. The second one is how much? This one is 120,000. The second one is how much?
200,000. 200,000.
200,000. So when you add up these two values, it will give us how much? 320. Happy? So that value, you bring it here as 320,000. So that value, you add it together according to the law. So you add it together to get for the total year. So you also do the same thing for what? New accounting date. You also do the same thing for new accounting dates. Which is new accounting date is what? Is as at what? As at 30/11, which is what? 30/11. The same annually. The same year, 2020, 2021, 2022. 2022. So the same year, you also do the same thing. The basis period for will now be 1/12/2016 to 30/11/2019. So this one will be 1/12/2019 to 30/11/2020. This one will be 1/12/2020 to 30/11/2021. Those are the basis period. We need what? The accounting day. I need 30/11/2019. Are we giving 30/11/2019? Let me go back to the question. 30/11/2019. Yes, we have what? 30/11/2019. We can get it from 30/11/2019. So let's go back to the question so that it will be easier. I need 30/11/2019. We can get that two information from this we can get that information from these two values. This one is what? 4 months. This 90,000 is 4 months. That means the balance of 80,000 will be gotten from the 150,000. Is that clear? Abi? 30/11/2019. So we are going to get 8 months here. We'll get what? The balance of the 4 months from this what? 90,000. So in that case, you have what? You have new 2020. So that will be 4 months. 4 months is equal to 90,000. Then the 8 months. 8 months will now be 8 divided by 12. Is it 12 months? 8 divided by 12 times 150. 8 divided by 12 multiplied by 150,000. So that will
100,000.
give us 100,000. Thank you. So that will give us 100,000. If you add up this value together, that will give us what? How much? 190,000. So we have what? We have it here as what? 190,000. So I need
You
what?
can't see your
30/11/20.
Excel.
Okay, sorry. I forgot that I have not shared. So that will give us 190,000. I also need 30/11/2020. Look at it here. We are giving that information from the question. Year ended 30/11/2020. To be how much? 360,000. That information was provided to us straight away by the examiner. I also need 30/11/2021. We also giving that information to be what? 300,000. We also giving that information to be 300,000. I will also add these three together to get total. Out of this, which one are we going to select? Which one are we going to select out of the two? Between the old and
The
the new
one with
account?
higher accessible profit.
So which one is having the higher accessible profit?
The new accounting date.
The new accounting date. So this one will be selected. So you now select this one. You have a selected. So this one will be what? Will be selected as the basis for what? That we are going to use for our computation. From there, after doing this now, you can now go to your what? Computation of your what? Of your tax liability. In computing our tax liability, we'll follow our law. The law of, we are going to start with what? With the commencement rule, because this question is having the 3 0 all joined together, accessible profit. So we have what? So for a company that commenced operation in 2016, 1/2/2016, and they have an accounting date of 31 July, what do you think will be the first year of assessment? They commenced business on 1/2/2016. Accounting date is 31/7. What will be the first year of assessment? Oh yeah, now. First year of assessment. First year of assessment. For a company that commenced
2017.
operation, yes, 2017. Thank you. 2017. So what will now be the basis period from the date of commencement, which is what? 1/2/20. So the next accounting date, what will be the next accounting date? 31. Oh yeah. So the next accounting date, which is what? 31 what? 7. 20 what? 31 7 20 what? Oh yeah, now we have done all these things before now.
2017.
2017. 31 7 2017. So this information now, if you go back, if you go to the question, we have a period 31 7 2016. We are giving that information straight away to be what? 60,000. The examiner gave us that value straight to be what? 60,000. So that means you don't need to prorate. So you just come here and write that information as what? We have it as what? 60,000 naira. So chicken no. So after that, we have what? 2018. What will be the basis period in 2018? Oh yeah? I need somebody to tell me the basis period in 2018. Basis period in 2018. Oh yeah, basis
1st
period
of
20,
August
1/8, 20 what?
2017.
2017. So what? Oh yeah, now. So when? So the next accounting date, 31/7. Because as at this 20, they are yet to change the accounting date. 1/7/20. Wait. For a company that commenced operation in what 2016, 1/2/20, so 31/7. This is supposed to be 2016 now. This one is 2016, which is what we are giving in the question. 60,000. Yeah. So this one will be 1/8/2016 to 31/7/2017. So the next accounting day, preceding year basis. If you look at the information, we are also giving the value to be how much? 180,000. From the question, we are giving that information to be what? 180,000. After that, we have what? 2019. The basis period in 2019 will be 1/8/2017 to 31/7/2018, preceding year basis. If you look at the question also, 31/7/2018, we're also giving that value to be what? 120,000. We are giving that value to be 120,000. In 2020 now, what now happened in 2020? 2020, we now say that we apply the principle of change of accounting date in 2020. So please, when you now get to 2020, you are not going to continue with this. You now go to that principle of your change of accounting date that you implement. So that principle that you implement, that anyone that you now, in our working, we have stated that we should select which one out of these two. Which one did we say we should select? The old or the new?
The
The
new
new
accounting.
accounting date. So it is the new accounting date that will be your what? The basis of your what? Of your tax liability for what? For that period. That the one, if it was the old accounting date that was selected, it will be the old accounting date that was you are going to repeat here as your what? At your solution. So, but because it was the new accounting date that we selected, it is the new accounting date that what we are going to what? Include here as what? For our selection. So after 2022, the next year we have is what? 2023. So in 2023, the company have a new account. So you know you continue with their accounting day, which is the new one, which is what? 1/12/2021 to 31/11/2022. So if you go to your question, we also give you that information to be what? 216,000. The examiner gave it to us 216,000. So after that year, we now have 2024. What now happened in 2024? What happened to the company in 2024? Who can tell me what happened to the company?
Cessation of business.
Cessation of business. Thank you. That is what? Cessation of business. Then when there is cessation
Sir,
of business, yeah?
so that's 2023
Yes.
to, is it 31st or 30th 11th?
Okay, 30th.
2022.
Okay. It's 30th. Thank you. It's 30th. So there is cessation of business in 2024. And when a company ceases business, what do we normally do? If it is a company, you give them a grace of how many months? Who can remind us? For company. How many months grace?
6 months.
3 months?
6 months.
Yeah, for company, it will be what? 6 months. So that means we are going to add 6 months to this what? To this their date of cessation. If you add 6 months to 31/3/2024, which year is it giving us? If we add 6 months to 31/3/2024, which date is it giving us?
September.
Which year?
June 2020.
Same year, 2024.
Be the same year, 2024. That means we still have what? The final year will still be what? 2024. So the basis period will now be what? The one for the preceding year, which is what? 1/12/2022 to 30/11/2023. And the last one for the cessation will now be 1/12/2023 to the date of cessation. What is the date of cessation? Which is what? 31/3/2024. If you look at this information, let me go back to the question. This information as well, I have year ended 30/11/2023. It was given to me as 122,000. The period to 31 March 2024, 48,000. All those information were also what? Given by the what? By the examiner straight away. So the first one is what? 192,000 and 48,000. So I have what? 192,000. Then I have 48,000. So this is how to work. So when you have a scenario of what? So you can have a question. So in after 2024, I cannot go to 2025 year of asset because the company has what? Ceased operation. And by the time they cease operation, when we added their 6 months grace, the year still gave us what? 2024. So that means their final year of assessment to pay the tax liability is what? 2024 year of assessment. So which is what? Which is the year to pay the tax liability. So you can see you can have a scenario whereby what? You are going to have a scenario like this, where you have what? The three information stated together. The 3 rule will be given to you as a single question. So you can have a scenario like that, whereby the 3 rule will be given to you as a single question. So when you have that, please take note that what? You are going to apply each of the rule separately on what? On each of what? Each of the provided information. You can see that in this information now, in this rule now, you are going to notice that there is what? There is occurrence of what? Certain item which occur in this rule. So look at this place now. 31/7/2018 to 1/12/2018. That is what? Occurrence of gap. Because of what? Because of the information given to us. So that means what? When you have the 3 items together, when you have the 3 scenarios together for a company, you can have what? The occurrence of what is called what? Gap. In what? In between what? In between the basis period. So this is a scenario when the 3 transactions are combined together. And these are the kind of scenario that we should expect the examiner to give us at our level, to give us a question that is going to have what? The 3 bases all together. So any question? Any question? So I'm going to forward the exercise for the solution to us now. Immediately, we are rounding up now. So I'm going to forward it to us so that we can also use
Hello, sir.
the 2. Yeah, hello?
Okay, please, I don't know. I just need to probably draw back. I just know. I want to know the way you prorate this when we are determining our accessible profit.
Okay.
Is that accessible profit? Yes. There's a way we prorate the date. I'm a bit confused there. If you go back to earlier working.
Yeah, proration of the date will depend on information given provided by the examiner. Let me pick one as a good example. For this 360,000 now, that gave us this. Okay, no. Okay, yes. That gave us this 240,000, this 360,000. If you look at what we needed is 1/8/2019 to 31/7/2019. Look at that
2020.
information. 1/8/2019 to 31/7/2020. Abi, that is.
Yes.
And when the examiner gave us information, examiner gave us year ended 31/11/2020. Look at what examiner gave us. Year ended 30/11/2020. 30/11/20. That means what we are giving is more than what we needed. We are giving 12 months here that is ending 30/11/2020 to be 360,000. Look at it. We gave us that information to be 360,000. And if you look at this info, what we needed year is going to, in this way, it's going to end as at when? 31/7, Abi? It's going to
Yes.
end 31/7/2020.
2020.
Yes. So that means between this period of our information, this 30/11/2020, this information is going to start. So it's going to start from 1/12. It's going to start from 1/12/2019. Abi? To
Yes.
30/11/2020.
Mm.
Yeah. This is what the info. So that means this information we have now. And we need 1/8/2019. And we only have 1/12/2019 in this 360. So we now say from 1/12/2019 to this 31/7/2020. How many months is? Look at it. This one is going to start from 1/12/2019 to 30/11/2020.
months.
So from 1/12/2019 to 31/7/2020. How many months
That's
is
8
that?
months.
8 months.
Okay.
So that's where we got the 8 from. Is it clear to you now? That is where we got the 8
Okay.
from.
Okay.
And the information given to us relate to how many months? 12 months. So
Mhm.
you now base it on what? The information given to you, which is what? 8 divided by 12 times what? The value.
Fine.
So that is where we got the information from. Is it clear to you now?
Yes, thank you.
Yeah. Any other question? Any other question? So in the absence of no question, so this is where we are going to stop the class for today. So I'm going to send the solution to us right away so that I will not forget. So I've also forwarded the material to our group so we can get the material from the group. So in order for us to have what? To also look at the material and study them on our own. So the solution will be forwarded to us right away. So for us to have what? An understanding of what we did under the topic. So with that, we are going to start. So we are going to continue from our next class. So with this, we have successfully completed basis of assessment. So in our next class now, we'll be starting with loss relief. So I've also forwarded the material relating to that. So we are starting with loss relief. So from our next class. So have a lovely day ahead. And so thank